Bonjour, Marie Concert here. I'm a real estate broker in Portland, Oregon, and in today's video, I would like to talk about the state of the market. The governor is starting to open up the different counties, and I am hopeful that by mid-June, all the counties will be open. Maybe I'm optimistic, but I like to think that's going to happen. So in today's episode, I want to talk a little bit about what has happened and what may still happen. And I'm going to use some data here. So I'm going to share my screen. And I'll start with a question on everybody's mind, which is, when is the economy going to fully recover? So now this is a question that a lot of economists are trying to answer at the moment. And they are all agreeing that it's going to be a V-shaped recovery. So what is a V-shaped recovery? If I take you to the next slide, it is showing that it goes down, which is in the second quarter when this pandemic, was basically froze our economy. That is going to go down, and then the recovery happens fairly quickly afterwards. So on this particular slide, you can see that 3 or 4 of the major financial institutions are expecting the recovery to start in the third quarter of 2020, and all of them are predicting it to be started by the fourth quarter, by the end of this year. In other words, they are hopeful that once the shutdown is done and over with, that the economy will pick up again where it left, or almost where it left. What is difficult here is that the economists are dealing with 3 different types of science. The business science, which is what they're used to, looking back at past slowdowns and try to use that information in order to project what's going to happen with this slowdown. And we're going to look at a slide here, kind of showing us that from an unemployment standpoint. The second piece is the health science. When will COVID-19 be under control? Will there be a flare-up in the fall? That's still unclear, unfortunately. And the third piece is people science, meaning once the businesses are able to open again, how long will it take for the American consumer to resume normal consumption patterns? So that's the part that's a little unclear. However, Sam Cater, from the chief economist at Freddie Mac, summarizes it pretty well by saying although the uncertainty of the crisis means forecasts of economic activity are more unclear than usual, we expect that most of the economic damage from the virus will be contained to the first half of the year. So going forward, we should see a recovery starting in the second half of 2020. Now, some people are concerned that what we're living through right now is a repeat of what happened in 2008. Now, in 2008, it was the financial institutions that were in crisis, and people had borrowed too much on their homes, leaving them with very little equity. This time around, this picture is completely different. The percentage of homeowner equity in 2020, and those are 2020 numbers, it's much higher than what we had in 2008. 42% of Americans, of homeowners here, own their home free and clear. And an additional 16.6% have at least 60% equity in their home. It's huge. It's only 7.3% of homeowners that have less than 10% equity in their home. This is a completely different picture from 2008. So we are looking at close to 60% of homeowners that have at least 60% equity in their homes. And by the way, if you're listening to this, know that as a homeowner, know that the average equity in a mortgaged home right now is $177,000. And again, this is 2020 numbers. So if you have been considering selling your home and buying a larger home or buying a smaller home, now is the time to actually understand what kind of equity your home has and your home holds. And I'm happy to provide you with a free market analysis on that piece. But back to our slide here. This is a completely different picture than what we had in 2008. Now, what is different is that we have had historically high levels of unemployment filings, and we had a lot of unemployment in 2008, but this is a different beast altogether. Now, this graph lets us think that we may have topped the max number of unemployment filings per week, and hopefully that is the case. It's still a lot of people who are going through a very tough time, having lost their having lost their jobs. Some people have been furloughed. So a lot of people are going through a very, very rough time right now, but hopefully that worst piece here is now behind us, hopefully. And the other piece that the US Bureau of Labor Statistics has issued earlier this month is that they expect that 10% of the job losses are permanent when the other ones were temporary. So hopefully they're wrong, because it would be great if it was less than 10%. But it would be nice if it was not permanent. A bigger number of job losses were permanent. Now, what is it going to take? How long is it going to take for this unemployment rate to go back to pre-crisis level? That's where those economists are going back and looking at the Great Recession and the Great Depression. Now, Great Depression in white, it took 12 years to go back to those pre-crisis levels. With the Great Recession of 2006 to 2016, it took 9 years to go back to pre-crisis levels. With this particular COVID-19 crisis, Goldman Sachs is projecting that it will take about 2 years to go back to unemployment rates that were pre-crisis levels. And JP Morgan seems to be offering a shorter time frame for the jobs recovery. So we'll see what happens. But the message here from those economists is that they're predicting that it will be a much faster recovery once the economy reopens. Now, what does that mean when it comes to real estate? Because a lot of people have thought that maybe things have slowed down, and they have to a certain extent, but the truth is actually it's in the data. So let's take a look at the lockbox openings. So let me refresh, let me put a little bit more context around this. The governor never shut down real estate. We were considered essential since the beginning of this crisis. So we continue to put homes for sale, we continue to put buyers under contract, and we continued showing homes with all the precautions that we needed to take in order to keep everybody safe and healthy. So the one thing we could not do, though, is open houses. So those lockbox opens is the true activity of buyers who were looking to buy a home and had their agents open the door for them. So those opening rates, we started in March, and the first quarter of 2020 was actually much stronger than 2019. And I'll show you that in the next slide here. But basically, we were having a better first week of March than 2019. Not by much, but still. And then the talk of this virus and pandemic started to hit the news and become more prominent. And we saw the level of activity kind of leveling with 2019. Then it went down. It started to go down by a quarter, then by about half, then by about 56% down, another half we're back to, so the next 4 weeks, basically, it was about half the activity, right? Give or take. By the end of April, we were at minus 35%, early May, minus 34.58%. And we are, by mid-May, we were about a quarter down to what our opening door activity was in 2019. Now, I'm putting the emphasis on this because what truly matters is understanding what kind of impact did that have on the number of homes sold. Well, this is our next graph here, which is the sales pending, meaning number of homes that went under contract during that time frame. So what I said was first quarter was very strong. We were having a very strong first quarter with a lot of buyers taking advantage of low interest rates. So we were 20% over 2019 and close to actually 30% over 2019 activities. Now, while the number of doors opening, remember, were happening, we still had people going under contract. What that tells you is that the people who were actually looking at homes were motivated and ready to write an offer. So we kind of on March, the third week of March, we started to have a plateau of activity. And then week 4 is when the governor announced stay home, save lives. And we saw a decline of about 20%. And then that following week, it went down 43% compared to 2019, but that means we still had 349 homes going under contract. And then that number started to decline again, or going back up, I guess. The delta started to reduce to the point that it reached the same level as 2019 at the end of April, early May. And the month of May has been about, similar to 2019. We're back to our spring market. The issue that we have, though, is that we still have one threat that is happening to our market, because people are thinking the prices are going to go down. I'm waiting for things to cool off, and I will resume when the market is going to cool off. Well, you can see that it's not cooling off, number one, but our biggest threat remains the lack of inventory. Housing supply remains at historically low levels. So house price growth is likely to slow down because, again, we have those job losses and furloughs that unfortunately is going to slow down some of our buyers, but it's not likely to go negative, at least not this year. And I want to share with you some of those slides between February and March, where our seller traffic between February and March remained unchanged. It was weak before, it was still weak in March. Meanwhile, our buyers were strong in February and remained strong in March. So we have a huge discrepancy with high demand and low supply. That results in a pretty quick, fast market. So if you are listening to this and you have been wanting to buy a home, the key is to be ready before you start looking for a home. And I offer a free consultation for buyers to prepare them financially and explain how this process works. So don't hesitate, reach out, and we can sit down and get you ready and equipped for this market. But homes in Oregon in general stay on the market less than 30 days. So be mindful of that. Now, this situation is not new in Oregon. In Portland, greater metro area in general. We have been having less than a 4 months of inventory of homes since about 2013-14. And that is what we call a seller's market. So the good news is homes still sell. You just need to be ready. And price is one element of a lot of other terms in a contract. So get together with your realtor. If you do not have one, I'm happy to help you, but there are ways to make your offer strong that will make you make your contract, your offer win. But know that this situation of a lack of supply of homes to sell is not new here, and it has not been made better by this pandemic because a lot of sellers have taken their home off the market. Now we're hoping once everything kind of calms down and reopens that those homes will come back on the market. But you need to be ready as a buyer. Now I have those same numbers showing with colors, blue being a lot of inventory, a buyer's market, and in red, less inventory, not enough inventory to meet the demand, a seller's market. And you can see since 2013-14, with peaks in 2015 and 18, where we simply do not have enough homes for sale. Good news is for buyers, the interest rates are still low, incredibly low, and they are projected to remain low all the way through next year. So bottom line here is, if you're looking to sell, or if you're curious about the equity you have in your home in today's market, reach out, let's talk. There are ways to actually make your home safe, market your home in a safe manner when we have all adjusted. So talk to your realtor, talk to me, call me. I'm happy to discuss with you how we do this, okay? If you are a buyer and you want to buy a home this year, or you need to buy a home this year, let's get you ready. You need to be prepared more than ever before. So when you see your home, a home you like, you can hit the ground running and be successful at getting your offer accepted. So I stand ready to help, and I'm available via text, mail, call, Facebook Messenger. However you can find me, drop me a line and we can set up a time, either via Zoom meeting or face-to-face, taking the proper precautions, of course. But I'm happy to start this conversation with you and get you where you need to be. Thank you so much for listening, and have a great day. Bye-bye.